What is going on, guys, and welcome into the video. You guys know I have been a buyer in the market. I just cannot pass up steal deals like we've been seeing. I mean, it has been kind of ridiculous, and some already have paid off with big gains in my portfolio. But unfortunately, there are many stocks out there that will go to zero, and it can be tricky to spot those landmines from the real opportunities that are out there. Just because a stock is 90% off from its all-time highs does not mean it's a steal deal. I mean, for every Amazon that was 90% off from its all-time highs during the tech bubble, and an incredible steal deal after the tech bubble popped, there were hundreds of stocks that went belly up in the wake of that mess. So I will tell you which ones I think are most likely to not be a steal deal like Amazon, but more like a pets.com instead. Just hitting that like button is all that I ask in exchange for an honest take on this, and I'm going to keep the press on to have you guys subscribe too if you like honest content like this and not hype or doom and gloom either. Now, to be upfront, I honestly feel really bad for many folks out there because they are already seeing the very real effects of a bankruptcy in a company that was hyped up, and this is just the beginning, guys. There will be more bankruptcies coming, so that is why I'm putting out this video. Now, let me also be clear, many of these stocks we're going to talk about today and these companies will not actually go to zero. Some will go bankrupt, but others may get bought out or acquired, and yet others are going to get bailed out too. But no matter how all this falls out, these are investments that I prefer not to have in my portfolio at all. These opinions come from living through and investing through the tech bubble and the financial crisis up until today. I lived it and watched it daily during those crashes, and so that is kind of where I'm coming from here. And this is actually quite normal and needed, and more importantly, it's actually critical to the proper function in the stock market long-term and to the business cycle long-term. Anytime we come into a recession or high inflation or any other kind of macroeconomic turmoil, there will be casualties in the stock market. That is just a fact of investing. But much like recessions are part of the business cycle, so too are companies getting kind of swallowed up and going to zero in a downturn. This absolutely has to happen to weed out the bad companies that need to die in some cases, and it allows good companies that take care of their finances and are prepared for this and have superior products and management and all that other stuff to show what they are made of and come out stronger on the other end, either because there is less competition or because they bought up the competitors for pennies on the dollar. This is why I pushed so hard against hype penny stock craze, aside from the fact that it was just honestly ridiculous in the first place. But there was going to be a day of reckoning, and it's finally here for a lot of these stocks. And we will start right there with hype penny stocks and pre-revenue companies. I honestly really hope if you bought any of these pre-revenue penny stocks, you made sure they had a ton of cash on the balance sheet, or at least they raised it from investors that they bought during that hype run where it ran up, so that way they basically diluted down shareholders to have that cash. I'm sorry if that was you, but if they did not do that, they will go under. Venture capital is going to dry up in this sort of environment, and lending to those type of companies will also do the same, and it's going to dry up. Doesn't matter at all if your product may cure cancer one day in the future with this amazing tech that hasn't been approved yet at all. And no, I don't care that they had a slick marketing showcase or an industry day with lots of experts and doctors, because that's all simply a marketing ploy. No revenue and no cash means bankruptcy in any type of market, but especially in this type of market. If the tech is actually game-changing, or it's the next EV to go to the moon or actually cure cancer or whatever the heck it is, it may get bought out. Otherwise, those companies are just going to go completely under. And this applies not just to the hype penny stocks, but the pre-revenue stocks as well. And unfortunately, timing is everything when starting a business, and there are great companies out there that won't make it because the funding will dry up and they won't have the cash to survive. If they had started 5 years ago and were able to bring the product to market and generate revenue, they may have been able to survive this and actually then thrive on the back end of this. But now they just do not have the time or the money to keep the doors open to get there. Many great ideas over the history of time and many great companies over the history of time have never seen the light of day before because of this. Some stocks that I think may fit this bill would be a stock like Workhorse, Bingo, who is actually honestly finally creating revenue, but they were pre-revenue last year when the hype run was happening, so they are not out of the woods, but they're not as bad off as Workhorse either. And quite honestly, any of the EV players from last year or the year before that got hot because somehow people thought this was going to replace all the, ICE cars tomorrow, and having a $50,000 in revenue in a quarter or no revenue in a quarter meant an immediate $500 or even $1 billion valuation on the company. No product, no nothing else, just basically, a little drawing or design, or in some cases, maybe a Model 2 or a model that you push down the road or something like that, but no actual, ability to scale or actually get to putting cars on the road. And if you don't know how to do a valuation or how to review the financials and avoid hype trash like this, and you want a group of investors and myself to personally help you, and you want to take 5 courses for free and get hundreds of lessons and tutorials, see my complete watch list with price targets, and see every move I make in real time, make sure you check out the pinned comment down there and become a member, as I accidentally left the sale up on the website, so I decided to leave it up until this weekend, and then it goes away after that. So make sure you lock in your sale price that you get to keep as long as you stay a member. And I really need an assistant to help me remember this kind of stuff. What do you want that job out there? Probably not. I don't blame you at all. I forget a lot of things though. All right, so on to the second group that may go to zero, and that is heavily debt-laden companies that are not actually profitable and are absolutely at risk as well. Think kind of the airlines or legacy auto can fit into this category. Now, I agree that the airlines will get bailed out and won't go bankrupt because the federal government will consider them vital to the proper function of the economy, but that doesn't mean their balance sheet will improve and the stock will suffer because of it. Expect some consolidation too, as well, as smaller airlines are going to get swallowed up by the big guys. I also expect the same for legacy auto. We will see some consolidation and some form of lifeline handed out by the federal government if it starts to get ugly out there for them. It's why I don't think Tesla will just eliminate all the competition like many others out there keep saying. The deck is stacked against them, and the government will provide the lifelines necessary to keep most open, just like they did during the financial crisis. And for example stocks of these type stocks, just basically pick any of the airlines or legacy automakers. I have no clue which one is the worst of the bunch, to be honest, but I do believe they will all receive a lifeline or bailout in the end, or get swallowed up and kind of conglomerated together. But there will be no bailout for crypto brokers and crap coins and all that stuff like that. Now let me be very clear, I'm not a crypto hater, and I do believe the blockchain will be the future of money, and crypto will play a part along with some of the other crypto brokerages that are out there. But I also thought many brokerages were going bankrupt before Voyager and others filed for it and eventually went under. Anytime someone is offering a ridiculous return on your money just to keep it with them, it screams a massive red flag to me, and during a downturn, it's going to unravel. I would consider a 7% return to be skeptical at best, much less 20% or 30% being offered by some of the crypto brokerages at the height of all this. I think everything got way too far out of control all the way around, from leverage to transparency to reporting, so there's going to be massive regulation coming for crypto. Now, regulation alone will kill many of these pretenders that are not profitable, much less with the regulation that will come that's going to just absolutely destroy them. I think you will see the brokers and coins that are worth anything get swallowed up into the bigger brokerages like Coinbase, and many of the smaller ones will just honestly kind of disappear and go into bankruptcy. Expect to see more of this over the coming months and over the next year. As far as which coins will go under, well, honestly, there's so many to choose from that outside of Bitcoin and Ethereum, there's a strong chance they go under unless they serve an actual utility and purpose and aren't just, basically a coin that's just intended to be traded and traded alone. It has no utility, it has no purpose. And the final group would be the pandemic winners that are now losers. There are many stocks that received a lot of hype and ran up big during the pandemic. And some were great businesses like Apple's and Amazon's who could sustain the growth, maybe not at the pace they saw during the pandemic, but there is no doubt in my mind that Apple and Amazon will grow their revenue and profits for many years into the future. Unfortunately, that cannot be said for many of the other businesses, and these honestly were easy to spot, but yet they still picked up traction as a great business outside the pandemic based on the pandemic numbers. I'll use Peloton as an example here. During normal times when you can get out and you're not flush with free money from the government, and you have the ability to go to the gym and get out and exercise and be on the streets in general, the market is really small for people who want to pay for a $1,000 plus bike. And then out of that crowd, how many are likely to pay the $30 a month subscription fees, which was the future driver of all the revenue growth models out there for those stocks? To me, that just spelled a niche product for a niche audience with no viable growth prospects into the future to justify a $100 billion plus valuation, much less having the ability to grow that valuation in the future when we are all out of the pandemic and everyone isn't loaded with free money. Apple, I see it. Amazon, I see it. But stocks like Peloton never made sense to do anything other than trade the hype run on those stocks. I don't see another run happening for those type of stocks in the future, and a bankruptcy or buyout is much more closer to the reality that is what will happen with these stocks. The good news is, this time we are in right now comes along every decade or so, and it's where fortunes are made. You just have to avoid these types of landmines along the way. So hopefully this was helpful, and if you don't know how to get a price target or how to do a valuation and want a step-by-step process for doing that, building wealth, and you want direct access to me and much more, remember to check out the pinned comment down below to become a member and at least look at everything you get. And click this video here for the stocks I'm still buying in this market, and click here for exactly what I'm doing to make huge money in this market. So thanks for watching, and we'll see you in the next one.